a bit of introduction about myself. My name is Alvin Lee from UBS. And so I'm here tonight to share with you this product called
Recording in progress.
Called a daily leverage certificate. And also I'll also give you a bit of overview of the Hong Kong stocks market, and also how it has been performing over the past few months, and especially how you can use this daily leverage certificate to trade to maximize your potential return, okay, in such a market. And I am personally responsible for sales and marketing, and also product development, and also product issuance of daily leverage certificate in Singapore, as well as the warrants and CBBCs in Hong Kong. So actually, I'm not sure if you heard of the product DLCs before, but then if you haven't, it would be great, because tonight hopefully I will be able to give you a brief idea of what it is about. And also for those of you who have heard of the product and are still not so sure about it, want to give it a try, hopefully after tonight's session, you'll have more confidence in how the product is supposed to work. Okay, so first of all, I think everyone would agree that the Hong Kong market has been doing very badly, I would say, over the past few months. And for those of you who have been following Hang Seng Index, have been following Hong Kong market, you will see that the Hang Seng Index is actually near the 11-year low. Okay, so I think today as of close is 16,000 something, 16,300, 16,400. And so this screenshot is as of 12, right? And then which is last Wednesday. And actually the low 11 years ago was just 16,250. So it's basically as low as 11 years ago. So it has been quite bad because of so many factors. As you can tell, right? So because of the fact that, first of all, most of the index constituents are tech stocks, the Chinese tech stocks that are listed in Hong Kong, and obviously they have not been doing very well. And also another very big component in the Hang Seng Index is HSBC, and HSBC because of how pounds has been doing, also has been doing very badly. Okay, so I think let me just quickly go through the stock market overview, and then I'll talk about the daily leverage certificate, this type of product that is listed on the SGX, and how you can utilize it. Okay, so first of all, okay, let me just move a bit okay, yeah, I think it's better now. Okay, so this is Hong Kong, the major stocks that are listed in Hong Kong. I sort them by average daily turnover, and the top trader stocks I'm sure all of you have heard of or have also been trading as well. Tencent, Meituan, and then Alibaba, and what we call ATM, right? The top three most popular stocks in the Hong Kong market, as well as the JD.com, which is similar to Alibaba, also like an online e-commerce platform, and then Kuaishou, BYD, AIA, Hong Kong Exchange itself, and then the Ping An Insurance, China Mobile, CNOOC, which is an oil stock, and then Xiaomi, and then HSBC. So you can see that nearly half of them is the internet, like the tech sector, and then some of them are the hottest like EV sector, for example BYD, and then we have also got some of the more traditional very big cap financial stocks, including AIA and also HSBC, and then also some of the other very big cap stocks such as the Hong Kong Exchange itself, and also the China Mobile. Okay, but then if you look at the last column, the change percentage. Okay, first of all, if you look at the second last column, year-to-date performance, so many of them are down by a lot. Tencent, Meituan, ATM, you name it, right? And they're at least down by 30%. Some of them are even down 40% or more. But then you still can find stocks that are doing not too bad. For example, China Mobile is up by 7% year to date, and actually CNOC, the oil stocks, because of how the oil price has been doing, especially earlier in the year. So the stock itself is actually up. I would say it's probably the only index stock that is up double digit year to date. Okay, but then if you look at the last column, which is the change percentage just in the past month, no stock is up basically. So it's just has been really, really bad in the past 2 months, I would say. So a lot of people are already talking about, is it the trough already? Is it at the bottom already? Are we can we start to buy some stocks, right? I cannot comment on that, but I think a lot of people are already like guessing if this could be the bottom or if it is at least near the bottom. Okay, so we see some investors are already starting to buy on dips, but then in this case, if you try to like guess the bottom, I would say it's to be honest, do not buy leverage products if you try to buy on dips, especially not daily leverage certificate, which I will explain the features later on. If you are trying to guess the bottom, probably the single stocks would be the product that you want to go for. But if you have a very strong view on like a short-term movement, for example, if you think the market is still going to drop, and then suddenly because of some short cover or because of like any other news, then you see some stocks are actually going up today, but you think it's very likely to drop even further, then in this case you can consider buying the short daily leverage certificate, such that if the stock continues to drop, then you'll be able to get a positive return from the daily leverage certificate. Okay, but if you are trying to guess the bottom, I think my recommendation is that do not buy the daily leverage certificate. In this case, you might consider the stocks themselves. All right. Okay. So sorry. Let me move to the next slide. So I'll talk about some stocks later on, but then before that, let me just quickly go through some of the basics about daily leverage certificate. Okay, and so DLC, right? So this daily leverage certificate, what we call DLC, is a product that has been on SGX for quite some time already. I think it has been on the SGX for around 5 years already. So it started in 2017, and UBS, we launched the products only in February this year. We are still relatively a new joiner to the market, and then but I would say within just a very short history, around 8 months history, we have already issued a very I would say comprehensive product range that has covered quite a lot of especially the Hong Kong underlying stocks. Okay, so first of all, what is DLC, right? And how you can use DLC to get a positive return in such a market. Okay, so DLC, first of all, is a leverage trading product. As you can tell from the name, there's a leverage in the name, right? So this product is a leverage product in the sense that if the stock goes up or down by say 1%, the DLC, which is a separate trading counter itself, the DLC will go up or down by much more than that. Okay, so the leverage, you can have 3 times, 5 times, or 7 times. For example, 5 times, if the stock goes up by 1% today, your DLC will go up by 5%. So for every 1% in the stock is 5% in the DLC. And DLC comes in 2 types. It's either long DLC or short DLC. So if you have a long DLC, then if the stock today goes up by 1%, the long DLC will go up by 5%. And then if there's say a short DLC, and then if the stock today is down by 2%, then your 5 times short DLC will go up by 2 times 5. It will be going up by 10% in this case. Okay, so it's a leverage product. It's a separate trading counter, and then it comes in long or short version. So if you are bullish, you buy the long DLC. So long DLC is the name. Okay, it's not saying that you long the DLC or short the DLC, because for DLC we recommend investors to always buy the counter and then sell it back when you want to realize it. Okay, so if you're bullish, you buy the long DLC, and then if you're bearish, you buy the short DLC. Okay, although obviously you can still short the long, but then it's just something that we do not recommend investors to do so generally. Okay, and so I've just talked about leverage, right? So going back to daily, right? Why do we have this daily, the term in the name? So daily means that the leverage is fixed on a daily basis. It means that every day when we check the product terms, when we check the product performance, we see that the 5 times or 7 times, the relationship always holds on a daily basis. So every day you look at the stock is up by say 3%, then the long DLC will be up by 15%. Okay, so this relationship holds daily, and if you hold the product for longer, you'll see that this relationship does not necessarily hold, because if you want to fix it daily, you cannot fix the relationship for more than a day. If you have to fix it daily. So that's why it's called daily leverage certificate. Okay, if you hold it for longer, say 3 or 4 days, or even a couple of weeks, in this case, the leverage would deviate from the leverage factor, but then it can be more, it can also be less, depending on the underlying assets movement during the period that you hold the product. All right, and I'll talk about that later as well. And certificate means that this product is issued by an issuer, which is us, UBS in this case. And you can always identify the issuer by in the product name. So in the product name, you'll probably see, for example, if you have a Alibaba 5 times long DLC, you'll see that the name is Alibaba 5 times long or short, and then UB, and then the expiry date of the DLC. Okay, so if you see UB in the name, you know that DLC is issued by UBS. Okay, and it's also not just issued by UBS, it's also being market made by UBS, which means that UBS has an obligation to provide continuous market making on the DLC, which means that even if you are the only one trading the product, which usually not, but even if you are the only one trading the product, you will still see UBS always providing a market making, providing bid and offer, and then you can buy at the offer price, and then after that, if the stock really goes up, your long DLC will also go up. So our bid and offer will both go up, and then you will be able to sell it back to UBS at a higher bid price provided by UBS. Okay, so this is how this is what's meant by the market making mechanism, and we have the obligation to always provide the market making so long as the underlying stock is trading. Okay, and obviously this is subject to a little bit of conditions, which is when the product is above $0.001 Sing. Okay, this the only condition I would say. So long as the product is worth more than 0.001 Sing dollar, we will have the obligation to provide the liquidity. Okay, so this is what the certificate is about. Okay, and then let's go to the next slide. Okay, let's talk about some performance, right? Sorry. So let's do a case study. As you can see from this slide, you see that this is how Tencent has performed in March earlier this year. So that's when the Hong Kong market plunged by a lot in a very short period of time. Back then, there was some rumors about that the Chinese stocks that are listed in US will have to be delisted, okay, because of some accounting issues, okay. So the market, feared that would happen, and so that's why a lot of the tech-related sector, especially those that have a ADR listed in the US, their Hong Kong counters dropped massively, and then also, that also made the other tech-related stocks that are not listed in the US, but then those that are only listed in Hong Kong also dropped by a lot. Tencent has an ADR, but Tencent mainly is the more popular counter is the Hong Kong counter. So Tencent was also affected. So this is what how Tencent performed from February to March. So from 18 February to March 15, about a month's time, Tencent plunged by 38%. Okay, and then during the same period, the 5 times Tencent short DLC went up by 558% during the same period. Okay, so remember earlier I mentioned that the 5 times relationship only holds when you hold the product in one day, right? Technically, it only holds when you buy the product the previous day at close, and then you sell the product anytime the next day. Okay, that is when the 5 times relationship holds. Okay, and if you hold a product for more than one day, then it already would start to deviate. But what's important is how this deviation works. And in this case, Tencent went down by around 40%. 40 times 5 would be around 200%. In this case, the 5 times Tencent short DLC during the same period went up by so much more than 200%. It went up by 558% in the same period. Because that in this period of time, we have got a Tencent trending down, okay? When we have the stock trending down, we will have what we call compounding gain in the period. And then we will be able to get a compounding gain on the DLC, and such that the DLC will have a much more than 5 times relationship, okay? In this case, it's up by 558% on the short. And obviously the question would be, okay, what if I hold the long instead, right? What if I bet on the wrong direction and then I have been holding the long DLC in the same period? If it is following the 5 times relationship, then 40 times 5 would be 200%, and then your long DLC cannot be down by 200%. This is actually one benefit of using DLC, because the DLC cannot be down by more than 100%. So the worst that can happen is that you lose your investment capital. You will not be required to top up to pay for the margin call, because there's just no margin call on DLC. Okay, in this case, the worst case is that you lose the investment capital that you pay up initially, and in this case, the long DLC actually didn't lose entirely. Okay, in this case, the Tencent long dropped by 93%, 94% in this case. To be honest, it's almost gone. That's true. But then you still get a little bit of residual value in the DLC. I guess most importantly is that this DLC didn't lose you 200%. It cannot. It can only lose 100% the most. Okay, so this is how in this case, if you bought both the long and short in this period, actually you would have made 40 around more than 400%. You would have made more than 400% on your capital if you bought both long and short. Actually, well, you can also say that if you bought both, then you paid two times the capital. So in this case, you would have made at least more than 200% on your initial capital. But this is only if you catch such a huge trend. Okay, so I'm bringing up this example because I want to show you how this compounding work if you really catch a very big trend. Okay, so this is the compounding effect on DLC. And so another example is that the Hong Kong Exchange has been doing, has been dropping throughout the past few months. So this chart is from start of, so this is basically the past year's chart. But then if we focus on the performance from August to around end of September in 2 months' time, you can see that Hong Kong Exchange has been dropping steadily, has been dropping with a very, very solid trend. Okay, so during the same period, the 5 times short DLC, when the stock dropped around 30%, the 5 times short DLC went up by 300, around 290%, which is so much more than 30% times 5. So this is another case of a compounding gain. And actually on the wrong side, if you bet on the wrong direction, it's also a compounding gain in a sense that you lose less than the 5 times. Okay, so whenever you are able to catch a trend, you will benefit from compounding gain, even if you bet on the wrong direction. If you bet on the right direction, then obviously you get so much more than 5 times return, and you get a massive return in this case. But if you bet on the wrong direction, if the stock is trending, then you will lose less than 5 times. Okay, so this is how DLC works. And the longer period of time we look at, the bigger the compounding effect. And if the stock, if the trend is more solid, then also the bigger the compounding effect is. Okay, and so we cannot only look at the one side of the story. So I'm going to show you the time when you encounter compounding loss. Okay, so in this case, it's a HSBC, the stock, from around 20th of June to the 7th of July, so which is around 2 weeks time. In this case, the stock, so let's focus on this. Okay, let's focus on this area where you see that is around here. Okay, I hope you can see that. So the stock first goes up to around $53, and then before it dropping back, all right, to around 48. So the stock first go up and then go back down, and then in the end, the stock is down by, let's say it's unchanged, okay? It's down by 0.1% in this case. In this case, what happened to the long and short? 5 times. In this case, for the long is down by 2.5%, okay? So it's already down by more than this percentage times 5. This percentage times 5 is down 0.5%, all right? In this case, the HSBC long, 5 times long, is down by 2.5%. So it's already more than, it's down by more than the 5 times average. And then if we look at the short, because the stock is down, right, in this period, although it's by a very slight amount, but it's still down by 0.1%. In this case, actually both the long and short went down. So in this case, the short actually also went down by around 2.5%. So you can see that because the stock is almost flat, so you can almost say that this down by 2.5% is almost the compounding loss that you have got in this period of time. So when would you get a compounding loss? Is when the stock goes up and then down. So when the stock, doesn't really have a concrete direction, right? So go up and down and then up and down. This is when you would get a compounding loss. All right. And then if the stock goes up in a trend or down in a trend, this is when you will get a compounding gain. So when you buy a DLC, I would say you want to buy a DLC when you have a view on the stock trending. If you want to hold it for longer, you want to have a view that the stock will be trending. If you are trading for maybe just 2 or 3 days time, if you don't hold it for too long, then the compounding effect will be much less. Then you don't really have to worry too much about a compounding gain or loss in this case. You can focus more on the leverage factor provided by the DLC. But if you hold it for longer, then you probably want to have a view on whether the stock is trending as well. Okay. So this is about the compounding gain or loss. So compounding is a very, I would say, is a rather unique feature on DLC. Although it doesn't only exist in DLC, it exists in basically all the daily leverage product. So daily leverage product is not just a DLC, right? It's obviously, for example, if you trade the US market, you probably have traded those leverage ETFs before. So many of them are 3 times daily, 3 times long, or 3 times short, right? So all these ETFs have a compounding effect as well. The longer you hold, the more deviation there is. And another thing is that because the DLCs the leverage is higher, so then the compounding effect is also relatively larger than those leverage ETFs. And I think I might have forgot to mention that for single stocks DLCs, all the DLCs are of 5 times leverage at the moment. Okay, we think that the 5 times is sort of the sweet spot for stocks for you to benefit from the leverage. So that's why we focus on 5 times. But then if you would like to see maybe a 3 times or even higher leverage factor, feel free to also let us know as well. All right. So this is a very brief introduction about DLC. So basically, DLC is just I would say it's a very quite simple leverage product, because every day when you check the DLC performance, you can gauge the performance. You based on the underlying stock daily performance, right? When the stock is up by 2%, your DLC should be up by roughly 10%. And if it is not, then it's probably if it's not, feel free to call us, because we have the obligation to make sure that it is following roughly 5 times relationship. Okay. All right. So I will just also go through some underlying stock performance. So you can see that the Tencent, the biggest, the top most traded Hong Kong stock on the Hong Kong exchange, and I think actually out of ATM, out of Alibaba, Tencent, Meituan, actually Tencent, especially recently, has been doing, I would say, the worst among the 3 biggest tech stocks. So because of because of the news that the biggest shareholder is going to gradually sell off the stocks, mainly because of this news, and also together with the fact that the Chinese government has been restricting how much time teenagers can play games, online games, per week, actually every day. So these are the news that have been dragging Tencent down. And I think, for example, in this case, if you think the Tencent is going to trend down even more, because now it's already I think it's already reaching a lower in the past few years, right? And then if you think it's going to even trend down further, and as you can see from past month, actually the trend has been has been going down. So if you think that the trend will continue, you can consider buying the short DLC on Tencent. Okay, so this is Tencent, and then another one is Alibaba. Alibaba has been doing, I would say, relatively better than Tencent, although it's still down by a lot, especially after, when earlier in the year, in around June, people were still, betting that the Ant, the Alibaba subsidiary, the Ant Financial, will be listed in Hong Kong soon. So there was still the fantasy in around June, but then after that, we basically you started to see that like no one was talking about it anymore, and then then the stock just continued to trend down, and then for Hong Kong Exchange, very obviously because of the fact that the Hong Kong market turnover has been low, and this is no secret, everyone knows it, and that's why also you see that the Hong Kong Exchange itself has been trending down very steadily. And then Meituan, I would say overall, Meituan is doing the best among ATM, these three stocks. But then recently we still saw that Meituan plunge by a bit, right? So but overall is still doing relatively better than Tencent and Baba, because if you look at Tencent, right, we can reference the March low, because the low in March is when there was this Chinese ADRs news that they're going to be delisted. So back then, all the tech stocks plunge. All right, Tencent is already much lower than the March low, and then Alibaba is close to March low, while Meituan is actually still above March low. So you can see that Meituan is actually doing relatively much better than Alibaba and Tencent. Okay, so just to give you some idea. All right, and BYD, so has been doing very well earlier in the year, before July, when people start to see the automobile sector, the sales numbers start to become like not as good as people expected, and then also because of the fact that there's news about Warren Buffett selling his shares in BYD. So that's when the BYD started to go down and down. Okay, so just some recent news about it. And then China Mobile, I would say, is the most stable stock, I would say, among all the blue chips. Among those, the 10 to 20 blue chips that you saw earlier, China Mobile is already the most stable one. All right. So we have issued products only on Hong Kong underlyings and also US indices so far. All right. So we haven't issued products on Singapore underlyings yet. So at the moment, it's all on Hong Kong underlyings. So if you have any short-term views on Hong Kong underlyings, you can consider using this DLC. And also, because you don't have to go to the Hong Kong market to trade them, so you only need to go to the Singapore exchange, and then you can look up the DLC name or DLC counter, and then you will be able to find them, and then you can just trade them, right? And all these DLCs are traded in Sing dollars, so you don't have to convert the currency to Hong Kong dollar and then trade and then convert it back to Sing dollar. So in this case, you actually get to save the Forex conversion. So you get to save the spread, okay? Obviously, you'll still be subject to the currency appreciation or depreciation, but I think it's very a small amount, I would say, compared to trading a leverage product. If the Hong Kong dollar appreciates against Sing dollar, then you will see the DLC that is of Hong Kong underlying assets going up by that amount, even if the stock is unchanged. Okay, so this is just some features about DLC. So it's very I would say it's very it's a very simple access to the Hong Kong market. You don't have to go to the Hong Kong market itself. You can simply look up the DLC and then trade the Singapore counter that is referencing the Hong Kong underlying assets. All right. So I would show you the product range later on using our website. But then before that, let me also introduce to you the first 7 times US indices DLCs that we have just listed on the SGX. So before US indices, we have only got the Hong Kong underlyings, but then recently, actually just last Thursday, we issued our first pair of US indices DLCs. So they are of 7 times leverage. So you have a NASDAQ 7 times long and also NASDAQ 7 times short DLC. Okay, and first of all, these 2 DLCs, they are linked to the NASDAQ 100 index. They are not linked to the NASDAQ composite index. Okay, they're linked to the NASDAQ 100, and then because of the fact that these the US indices have futures that are trading almost 24 hours in a day. They're trading around, I think, 23 hours per day. So meaning that they trade during Asian hours. So that's why during Asian hours, you will see that the DLC price will follow the movement of the futures. Okay, so they still move during Asian hours. But obviously, for those people who buy SGX listed US underlying DLC, I would say most of the time people are betting on at least overnight movement in the US market, right? So obviously you can still day trade it, but then obviously I just think that most of the time people would be at least having a overnight view, or if not longer. Okay, so we have got these 2 DLC, NASDAQ 7 times long, NASDAQ 7 times short, and so I think if there's anything about these 2 DLCs that you would like to know further, you can feel free to email us or call our hotline after tonight's session, or feel free to ask any questions in the chat as well if you have any questions about not just these 2 DLCs but just any DLCs at all. Okay, and so these 2 DLCs we just listed last Thursday, and then we're going to expand to even more DLCs on more underlines, very, very soon. Okay, and okay, before I talk about DLCs further, let me just quickly go to sharing our website with you. Okay, let me just stop sharing this first. Okay, I'm going to go to our website here. Okay, I think you should be able to see the website now. Okay, let me just go to full screen. All right, so first of all, our website is dlc.ubs.com. So it's very easy to remember. Yeah, dlc.ubs.com, and then you will be able to find what DLCs we've got, and then how they have been doing, and then also some widgets on the website that help you that's either simulate the performance, or that tells you how different features work. So I would strongly recommend you to pay a visit to the website. And then if there's any questions, you can always feel free to call our hotline at 800-852-3932, all right, or email us here. Okay, and okay, first of all, let me go to show you the product range. So if you go to products and then go to search, you will see that we have got these DLCs listed. So at the moment, we have 74 DLCs. We have issued 74 DLCs in the past 8 months already. Okay, and then so these are the some of the underlyings. And then if we go to say today's all right, so say this one, Kili 5 times long. Okay, so you can see that here you see that the Kili 5 times long, and then stock today is down by 2%, and you can see the DLC is down by around slightly more than 10%. Actually, it should be down by 10. It's just that right before the market close, sometimes you see a market maker, maybe a couple of seconds before close, the market maker would widen a little bit. So that's why you see the latest bid price is maybe less than what it was a couple of seconds before. Okay, so you can also see that the Gili today's the performance is like this. The Gili performance is here, while the DLC performance is here. So you can see that it follows the underlying movement very well, even intraday. All right. So these are the just feel free to check it out, and then these are the product range here. At the moment, we have covered 74 DLCs on 29 Hong Kong stocks and 3 indices. All right. So for the Hong Kong stocks, we have got all these stocks that you can see here. All right. And then for indices, we have got the Hang Seng Index itself, and also Hang Seng China Enterprises Index, and also Hang Seng Tech Index. And then let's say if you go to Hang Seng Index, we have got 5 times as well as 7 times leverage. All right. For NDX, we have got 7 times leverage so far, but then we'll be expanding to also 5 times leverage as well. All right. So feel free to play around with the website. We have got a lot of tools. I don't have too much time to go through the tools tonight, but then I think we do have a lot of tools that can help you understand the DLCs better. All right. For example, this one, the price matrix, and then also the historical compounding return that allows you to drag a period in the past, and then it tells you how the DLCs perform during the that period of time. And one more thing, I think our website does have a very nice charting tool as well. So even if you don't trade the DLC, but you just want to check out the underlying performance, for example, like a Hang Seng Index, or say I don't know, say Tencent, Alibaba, for example, like how the stock has been performing, you can go to the widget here, and then you can also track a period in the past, and then it will tell you all the how the stock has been doing, as well as other technical indicators, right? So you can feel free to add a secondary chart here, for example, RSI, MACD, MACD, and also the other technical indicators. All right. Okay, so this is just a quick showcase of the website. Let me just go back to the okay, here, the presentation. All right. So I think the last thing I would like to talk about is this airbag. All right. I think a lot of you who have heard of DLCs might have heard of an airbag mechanism as well. All right. So airbag mechanism is something that is built into every DLC, and then it basically is triggered when the stock is against the DLC's direction by a lot. All right. So what does that mean, right? For example, 5 times stock DLCs, there is an airbag threshold that is of 15% daily movement, meaning that if the stock today is, if you bought a long DLC, and then if the stock today is down by if it is down by 15% daily, then the airbag mechanism will be triggered on that DLC. Okay, when the stock is down, the short DLC would not be triggered an airbag. Okay, it's only the long that is triggered when the stock is down. And then what does triggering mean, right? After the DLC is triggered airbag, which is when the DLC is down by a lot already, by the way. When the stock is down by 15, which is when the DLC is down by 75%, okay? And then in this case, the DLC will be will be suspended for around 1 hour before it resumes trading. And then after it resumes trading, the DLC exposure will be reduced. Okay, so it's like that's why it's called airbag. So it's like absorbs the impact and then slows things down. Okay, it's supposed to slow things down. Okay, and okay, after it's triggered, after an hour, when it resumes, and then if the stock continues to drop further, the drop in the DLC will be less compared to when there's no airbag. Okay, so this is how it's supposed to work. But airbag is actually, two-sided. If the underlying assets recovers after airbag, the recovery in the DLC will go up, when the underlying assets rebounds, right? In this case, the DLC will also go up less compared to when there's no airbag. So it's a neutral mechanism that is built into every DLC. Okay, but I prepared this slide because airbag is something that is built into every DLC. But then I don't want to focus too much on it because airbag, I think, is something that we should know about DLC. But then it's not something that we should we should worry about too much, I would say, because obviously that also depends on which stock that you pick, right? If you bought a DLC on a China Mobile, to be honest, I think you don't really have to worry about airbag at all, because I don't think you can find any days where China Mobile moves more than 15% per day. But if the stock that you pick is say I don't know, like very like those second tier tech stocks, right? Those stocks tend to be more choppy than the first tier tech stocks, and also because of the tech nature, they can go down or up by a lot every day, right? Okay, in this case, probably you have to worry about it more. You have to pay a little bit more attention to how it works. All right, and I think the key takeaway is that the airbag would not happen if you bet on the right direction. If you bought a long DLC and then the stock goes up by 15%, then you'll be making 75% on the long DLC. And then the airbag is not going to stop you. If the stock goes up even further, if the stock goes up by 20%, your DLC will go up by 100% in this case. All right. So this is how DLC airbag is supposed to work. Okay. Yeah. And so I think today, let me go to, so tonight, for those of you who haven't subscribed to our newsletter, because we do have a newsletter that we send out every Monday and Wednesday that has got the DLC's news. So whenever we have a new DLC's listed, new underlines, or if there's any new promotions, we'll also put on the DLC newsletter. So feel free to check it out. I would say you can subscribe to our newsletter to if you want to stay tuned about DLC news. And for those of you who subscribe tonight, actually we have prepared something. So let me go to share this slide. Let me see. Yeah, it's here. Okay, so if you subscribe to DLC newsletter, if you haven't already, if you subscribe tonight using this link, https dlcubs.com, and then EN voucher register. So, or you just scan this QR code. For those of you, I think you're listening to this webinar on the app, right? So you can just do a screen cap, right, of this QR code, and then subscribe to the newsletter. There will be a small token of appreciation of a 10 Sing$ Square voucher on a first come first serve basis. So thank you for supporting our DLC's business, and hopefully you'll be able to utilize this product to enlarge your potential return. Okay, so I'll just keep talking while I keep sharing this screen for a while. Okay, let me just also minimize this. All right, cool. Yeah. Okay. So I want to just, before I end my session, I would just want to highlight one more thing, but I'm not going to emphasize. Is that is the fact that as we issue more and more DLCs, it's very likely for you to find, say, if you want to long Tencent, for example, you probably would find more than one DLC. Even if it is the same underlying assets, same leverage factor, and also same direction, say 5 times long Tencent, you'll find more than one DLC. And then in this case, the question would be, which one to pick and how do I choose DLC, right? In this case, there's something that I think we should always pay attention to, and it's the sensitivity of the DLCs. All right, sensitivity is simply the how much change in the stock would trigger the DLC to move by one tick, because you want the DLC to be tick up and down very often, right? You don't want a DLC to require a huge amount of the stock to just move the DLC by one tick, right? Because you wanted more opportunities to go up and down and up and down, even if intraday. Even if you hold a DLC for longer, you still want the DLC to be sensitive, right? Okay. All right. I'm gonna stop sharing this screen, and then I'm going to go back to sharing the. Let me see the website. All right. So 1 second. Let me go to here. Yeah, I can see that. Here. Okay. Okay, I'm going back to the website, and then let me just quickly go to say Tencent. Okay, Tencent. So Tencent, 5 times long. All right. Actually, there are 3 DLCs for you to pick, and then all of them are 5 times. All of them are long. All of them are on Tencent, right? And then you can see that okay, there may be a difference in terms of expiry date, but then all of them are going to expire, after 2024. Okay, so it's not a problem because I don't think you want to hold a DLC for a year, right? So expiry date is not a problem. So in this case, you probably would want to go for the DLC that has the most, I would say that has the lowest sensitivity number. Okay, because sensitivity means that how much movement in the stock would trigger one tick move in the DLC. So you want this number to be as small as possible. In this case, you probably will want to pick this one at the 0.7, and then followed by this 0.8, followed by 7.7. All right, so meaning that for this DLC, the one in the middle, it only requires 74 cents in the stock to trigger one tick move in the DLC. Okay, so this is actually the this YT4W would be the best DLC among these 3. Okay, because in this case, do not just focus on the price. If you focus on the price, you probably would have picked the DLCs on the bottom. That is at a sorry, this is this the scroll bar. Okay, the one in the bottom is at the 0.006, right? It looks the cheapest, but then it's actually not the case, because all these 3 DLCs are going to provide you with a 5 times relationship in theory, because all of them are 5 times. But then in practice, you will be able to what you should be concerned about is that which one is the most sensitive. That's the first question. And then the second question is how much bid and offer spread you'll be paying if you buy and sell the DLC, right? And then obviously in this case, the one at the bottom, you'll only be paying 1 tick. That's true, but then this 1 tick is huge in terms of percentage, because for a product that is worth 0.006, you are paying 0.01. You are effectively paying how much? 16 to 17% spread already, right? If you buy this DLC. So it's something that we would recommend people to avoid, to be honest, because this DLC is just, first of all, the bid and offer spread is huge. And then second of all, the DLC is just not sensitive at all. And actually these two are actually correlated. Usually if the product is of a higher price, the sensitivity would also be better, in a sense that the sensitivity number is low. All right. So in this case, the top two products, actually, the second is slightly better than the first one, but I think they're not too different. They're both okay, I would say. But then the third one, I would just strongly recommend you to avoid. All right. So this is just some quick tips for those of you who would like to choose DLCs. All right. But then I think overall, the key takeaway is that the DLC, first of all, is a separate trading counter listed on the SGX. You can tell the DLC's underlying assets and then everything, from the name. Tencent, 5 times, long or short, UB, the issuer, and then the expiry date. You can, tell a lot of information just by the name. And then if you're bullish, you buy the long DLC. If you are bearish, you buy the short DLC. And then DLC provides you with a fixed daily leverage. For stocks, you have 5 times leverage factor. For index, you have either 5 or 7 times. Okay, leverage factor. And then this leverage relationship always holds on a daily basis. Set aside the rounding difference and then the cost and fees and stuff. All right, so this is the theoretical, leverage relationship that you can get. All right, so all of our DLCs are on the Hong Kong underlyings, and then also US indices underlying as well. At the moment, it's NDX only. We will be expanding to other US index as well. Okay. And then if you have any short-term views, obviously DLC, because it's a leverage product, is supposed to be a shorter-term, trading product. You can day trade a DLC, or you can hold a DLC for maybe a couple of days time. But do not hold for too long. Do not hold a DLC for a year. Okay, it's not something that for you to buy and hold. All right. So if you have any short-term view on any of these underlyings, you can consider using DLCs to enlarge your potential return. All right. So thank you very much.